Good afternoon and happy Thursday, everybody. It is Scott Wohlers with River Place Capital. It is Thursday, September the 3rd, and just wanted to talk about what we've seen move markets this past week. And as we've just wrapped up the best August in the S&P 500 that we've seen since 1986. And we've seen 5 continuous months of improvements in the stock market, or that meaning that the stock market closes up the month very positive for the month, and we've seen 5 straight months of gains in the S&P 500. And wanted to talk about what's going on internally, as today we are seeing a nice pullback in the markets and what's kind of driven the markets forward. So we've been talking a lot, and I'm sorry to repeat myself, but what's really led the markets higher over the last 5 months has been a select few names and a select few sectors that have really moved the S&P 500 forward, and that's going to be your technology sector as well as your biotech sector of the S&P 500. Those two sectors alone have really moved and raised the index higher, while the others are still not participating as much. So to give you some kind of numbers and comparisons, the equal weighted S&P 500, which is, as we've talked about, the S&P 500 is market cap weighted, meaning the larger your market cap is, the more influence you have on the market, the more you move the index itself, either higher or lower, is based upon how big your market cap is as a company. So the larger the company, the more influence you have on the index, positive or negative. The equal weight is everybody carries the same weight, no one company outweighs the other. That index is still negative year to date. And what's important about that, and why I want to talk about that, is the importance of diversification when we're in markets like this, when we have such narrow leadership. If you are talking about preserving your nest egg or your wealth itself, you don't want to be so singular focused or so narrowly focused in just one sector or just two sectors that give you the returns that you're getting. So if your portfolio itself is not the positive 6% that the S&P 500 is year to date, that's okay. And I would encourage you to continue to stay the course, because as you're going to see, as we talked about, for the market to be healthy, we really want to see that broad-based participation. And we've started a couple of times to see that happen, and we've started to see some false starts where that has happened, but it hasn't fully happened yet, where we've seen a shift of your underperformers starting to really gain traction and outperform the ones that have been your current winners in the market right now. So another thing that's moved markets this week that I don't want to lose sight of, or that's headline driven, it's very important, is you saw a nice rally into the close yesterday off of the CDC coming out and saying to the states, prepare for a vaccine as early as October to very beginning of November to be able to distribute vaccines out to clinics. And so you saw a nice rally in the market today. However, you've seen kind of a step back of that today, where we had Dr. Fauci come out and say, it doesn't look like there's going to be a vaccine until maybe the very end of this year, the beginning of next year. And so today that has been a catalyst, after all of the winning, to see some markets, some pullbacks, some profit taking. And you're actually seeing what is a healthier sign in the markets, where you're seeing your tech be the underperformers today, and you're seeing profits being taken from the tech sector, and your value sector is actually on a relative basis outperforming your tech sector today. So as always, if you have questions about what's going on in your portfolio or how to be properly diversified in this market, call us. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of the week and a wonderful Labor Day weekend. Thank you.